The end of 2022 is fast approaching, and one of the best and most underutilized tax strategies that you could use is something called the Roth conversion. And the deadline to get that done for 2022 is at the end of the year on December 31st. So in this video, we're going to go over 5 reasons why 2022 is going to be a really good year to consider doing a Roth conversion if you haven't done so before. So to jump right into it, the first reason why you should consider doing a Roth conversion this year is simply because they're still available. Roth conversions are not something that's been around for a long time. The rule only came out in 2010, so this is only the 12th year that this has been even an option for people to consider. Prior to this, if you got money out of your IRA, you had to put it into an investment account, and then you'd be subject to capital gains taxes, as well as paying taxes on any dividends that got spat out of it. So this Roth conversion thing is still fairly new in the grand scheme of things. So just the fact alone that it is still available is one reason why you should consider using it before it's gone, because you never know when Congress is going to change their mind and take it away from you. Now, reason number 2 why you want to consider doing a Roth conversion this year is because of your age. So the whole concept of Roth is putting money into an account that's you already pay taxes on it, right? So it's going to grow tax-free for you. Now, the longer it grows, the more time you have in the market, the more growth you're going to see, right? That's why we say time in the market is much better than trying to time the market. So if you just put money in there and do nothing, you're usually better off than if you try to do the analysis and, hey, I'm going to go to cash here, then I'm going to invest here. Most times it doesn't really work. The market's too hard to predict. So just being in the market usually results in better long-term results. The longer you can be in a Roth, the better it's going to be for you. And when I say age here is the younger you get in, the more tax-free growth you're going to realize within your lifetime, and the more your kids or whoever you're going to inherit your money will also see. So today is the youngest any of us are ever going to be again in our lifetime. So it makes sense to get these things started sooner rather than later, just so you can get the clock rolling on the Roth IRA accounts, as well as so you can start witnessing some of that tax-free growth. Reason number 3, I already kind of mentioned it, but it's the Roth accounts grow tax-free. So once you put money into it, any growth you're going to see, it's yours to keep tax-free. The IRS can't touch any of it. So if your account goes from $2,000 to $4,000 in a Roth, that $2,000 that you saw it grow is 100% yours to keep. So that's tax-free growth is something that doesn't exist anywhere else. So it's definitely a really big benefit you want to consider and utilize for your retirement planning. Every other asset you own is either in an investment account, which is subject to capital gains taxes, or is in a pre-tax account in which you have to pay taxes on every percent you take out of that account. So just the tax-free nature alone is one really big reason why most people actually end up doing Roth conversions. Reason number 4, and this might sound a little strange, is because the market is down over 20% as of the recording of this video, that's actually a really good reason to convert into a Roth. The reason being is because markets are depressed now, we can buy into the market at a lower price. So when the market comes back to even, all the growth that I'm going to get back in my accounts that I lost earlier this year is going to come back tax-free rather than being taxable, like if I left it in my IRA account. So the conversion helps you realize any future returns tax-free, kind of like I said in number 3. But because the market's down, you can see even more growth, even if the market just goes back to where it was at the beginning of this year, right? So if you think about it, if you had $10,000 at the beginning of this year, and now you have $8,000 left. If you did the conversion at the beginning of the year, you would convert $10,000 from an IRA over into a Roth account, and say you owe 20% taxes on it, that's a $2,000 tax bill. If you did it today, when the account's only worth $8,000, now your tax bill is $1,600. So you save $400 because the market is now down. Now, don't get too hung up on the dollars here, because really behind the scenes, it's all about shares, right? What the shares are worth is what our total account is actually valued at. So if you had the same amount of shares, let's say you had 10 shares in a company and they're worth $10,000 at the beginning of the year, and fast forward to now, you still have your 10 shares, but their value is less. Right now it's only $8,000. You convert, you pay taxes on whatever the dollar amount is, but if you just bought back the same shares in a Roth, when they went back to being where they were at the beginning of the year and your account went from being 8,000 to 10,000, you would see that tax-free growth component. But because the market went down, you end up saving yourself $400 in taxes. So the silver lining of seeing a down market like we have in 2022 is that they're really good years for Roth conversions. Now, the 5th reason to consider doing a Roth conversion this year is Roth accounts are essentially a tax insurance for your retirement. Now, when I say tax insurance, is you're insuring yourself from future tax hikes, right? So if I keep my money in a DCP or a Plan 3 or an IRA account, and it doubles in size in the next 10 years, so does my tax liability. All right, now I owe double the amount of taxes. And that's assuming nothing changes. If taxes go up and my account grew that much, now my taxes might go up, 150%, 200%. It all depends on what rates are. So by doing the Roth conversion, you're protecting yourself from the unknown. You're paying the devil that you know today, because in the future, my account's still gonna grow, as the nature's markets do. And if I think taxes may go up, which there's a pretty good chance of that considering where they are today, you're more than likely to come out ahead by doing the conversion and just biting the bullet on the current tax rate that you're in now. Now, the second part of this is not just that you're protecting yourself against the federal taxes per se, but you're also shielding yourself against other hidden tax traps that occur in retirement. So the two main ones to look for are the Medicare Part B premiums and your Social Security taxes. Both of those are based on what your adjusted gross income is in retirement. So when it comes to Social Security, they have their own set formula, but essentially the more pre-tax or earned income you have after being collecting Social Security, more of it becomes subject to taxes. So if you have money in a Roth and you take money out of the Roth, it doesn't increase your adjusted gross income. It also doesn't cause more of your Social Security benefits to become subject to taxes. So really it's a way to save yourself not only just the federal tax in the long run, but you're also saving yourself paying taxes on more of your Social Security benefits down the road. Now, when it comes to the Medicare Part B premiums, this isn't a tax, but we all have to pay for Medicare. However, if you hit certain income thresholds in retirement, you actually have to pay more for Medicare. For instance, just one level higher, and it depends on if you're single or married, how you're filing your taxes. They all have their own thresholds. You cross this threshold by just $1, both you and your spouse now have to pay increased medical premiums for a full year. So when we do a Roth conversion early in retirement, and we need money out later, if we need to take a bigger chunk and hopefully for something fun, like going on vacation or something, you could take, 10, 20, $100,000 out of your Roth IRA account, and it does not change your taxes, doesn't cause more of your Social Security to become subject to tax, and it does not increase your Medicare premiums. So like I said, it's a way to insure yourself from future tax liabilities or increased premiums on your Medicare benefits. So that's just one of the hidden benefits of having money converted into Roth. So if this whole concept of Roth conversion still feels pretty new to you, you're nervous about doing it on your own, then feel free to book a call on our calendar, and we're happy to answer any questions that you have, give you best tips and pointers on how to do it correctly. And if at the end of the day, if you want us to kind of take over it and help you implement these tax strategies, of course, we'd be more than happy to do that, like we do with all of our other clients each year. So the link to get on our calendar is in the description below. I look forward to seeing you all next week. Remember that your future depends what you do today.